AutoNation is going to kick off the hour with the release of the company's December retail sales. Mike Jackson's here. Before we do that, just real quick, Mike, welcome. It's great to see you.
Good to be here, Joe.
Good to see you. I have you for 2 hours.
Thank you. Good morning.
Good morning.
Nice to meet Carl's seat.
Yep. Why was AmeriCredit not sufficient? Why do they need Ally? Have you had trouble getting financing when you sell a GM car through AmeriCredit? That wasn't big enough, or it wasn't enough of a...
AmeriCredit is relatively small, and it specializes in subprime. So it was a segment that General Motors needed to address quickly, but by no means does it address the entire spectrum of credit that's needed.
Does it need Ally?
It needs
GMAC?
a finance company.
It does.
A la like it had, no pun intended, with GMAC.
Classic.
You know, GMAC was a great company.
For mortgages.
Other than before home mortgages, it never lost its discipline in automotive underwriting. The default rate never went above 1% in automotive, and I strongly believe, and we should talk to Steve Gursky a little later this morning when he's here, that a manufacturer needs a strategic partner in a finance company, and General Motors is lacking that today. So if you go to leasing, it's still very thin for General Motors.
Has it affected what consumers come in and buy, or what they lease?
Yes, because, Becky, if you're a subprime customer, and even if you've bought Chevys for 40 years, if Chevy doesn't have financing for you, you will go to another brand to find the financing. And if you're a leasing customer and you've been leasing Chevys for 20 years, if there's not a leasing product for you, you will go out in the marketplace until you find a leasing product. So these customers are loyal to the financial instrument, not to the automotive brand. And if you don't have the products to address it, you're going to leave significant volume and share on the table. And that's the situation that General Motors finds itself in today.
So you figure they may do something. This isn't just
I'm urging them.
You're urging them to do something.
I'm urging them to do something. I think they should do something, and I'm hopefully that they will do something.
All right. How were your sales?
Sales were excellent in December. We retailed just under 22,000 new vehicles in the month of December. That's an increase of 12%. The big drivers were our domestic business, up over 20%, led by Ford Motor Company, up 28%. Pickup trucks were very strong again, up 35% once again. Good recovery in California, up over 21%. So really a good, strong end to the year. And for the industry, the selling rate in December was 12,500,000 units, which brought the full year to the number that I've been sitting here talking about for over a year, 11,500,000, just over that.
For the year, but
for the total year for
run
the industry,
rate at 12.5.
But leaving the year at a run rate of 12.5, which is really significant.
What did we come into the year at?
We came into the year with a run rate just over 10 million units. So the first quarter was like, if you average it, about 10.2, then it went to 10.3, then to 10.5, and 11.3, 11.5, and then finally over 12 million unit run rate going into.
What's your prediction for the fourth quarter of 2011 run rate?
So I think the full year will be in the high 12s, probably around 12,800,000, but we'll have an exit rate of 13 million units.
Really?
Going into 2012.
What will the high for the cycle be?
The cycle is going to break through 16 million ultimately. I don't know whether that's 3 years away, 4 years away. Maybe even if you're talking about the peak of the cycle, you could even see 17 million units.
What was our previous high?
17,200,000.
We'll get back to that.
We will get back to that. I think it'll take, the peak will take several years, but we're going to be back at a run rate of over 15, 16 million within 2 to 3 years.
You don't think that was a bubble? You think that's normal?
No, it was not a bubble. You know, the industry ran at that number for 7 years. High 16s, if not 17 million. And if you look at the number of households being formed, increasing population, the age of vehicles, there's a huge delay in replacement. The average age of vehicles on the road in America is 10 years, and 35% of the vehicles are older than 12 years.
Well, that means that it doesn't matter whether we have a slowdown, some type of, if the brakes get put, if the Fed stuff, interest rates go up, China slows down, whatever pessimistic scenario you want, we're not going to, we'll still get back there.
We'll still get back there. It's only a matter of when, not if. If you look at the underlying demographics, the underlying replacement rate needs, it's only a question of how long it takes to get back there.
And what will the average, what will the CAFE be by then, do you think?
Well, we're mandated by 2016 2016 to the industry to get to 35, 36 miles per gallon.
So we're going to look like Europe, all this little buzzing.
No, I don't think.
Annoying.
I think by 2015, 2016, we're not quite there yet. But you know, before the election, the Obama administration floated that by 2020 they want to get to 62 miles per gallon. And I'm sitting there looking at it and saying, you know, yeah, pigs can fly. You know, it's just an impossible number. So imagine, here's an industry that worked with the administration.
Right.
You made a deal. You made a deal that you put in place for the next 5-6 years, a roadmap with a huge commitment on the part of the industry to fuel efficiency. What happens 6 months later? The industry says, well, let's double that number. Well, you can't work with that. It's impossible. So since the election, it's been a little bit quieter. So elections have consequences, as the president famously said. So we'll see where it goes. But this is a big debate. What happens from 2016 to 2020, 2021, something like that.
All right. Well, we'll. I want to talk to you about that. What is that Porsche? When in the heck is that going to be on the road?
Very, very limited numbers. You're talking about the 918 hybrid. I think it's a very interesting car in the following sense, because performance manufacturers and luxury manufacturers are struggling with the following issue. They have to be environmentally sensitive. Even they have to improve fuel economy. But hybrid technology in performance cars is no fun at all. And if you take the fun out of a performance car, Joe, if you're not having fun driving your Porsche to work in the morning, you're not going to pay that price premium. You're not going to buy it. So they're struggling to find a way to enhance fuel economy and environmental sensitivity in a fun-to-drive way. And the 918 is a very interesting technical solution.
For only $200,000, you can...
you wish it's only $200,000.
Really?
I don't know the price, but in looking at the car in person, I would say it's far more than $200,000.
All right, we'll get the picture of that thing. We'll talk more. We'll talk about it.
I think I brought the picture with me. It's a beautiful car.
Yeah.
All right, Mike's going to be with us for the next 2 hours. We'll talk a lot more about it. In the meantime, General Motors on the road to recovery following its successful IPO. One of the drivers leading this charge is Steve Gursky. He is vice chairman of corporate strategy and business development at General Motors. He's also a member of GM's board. And Mr. Gursky, we want to thank you for being with us this morning.
Thanks. Good morning, Becky.
Good morning. I'm not sure if you heard at the top of the show, but there are reports out there that GM is interested in potentially buying back a stake in Ally Financial, which used to be GMAC. Can you comment at all at that? Is this a move that GM might be interested in?
Well, I'm not going to comment on speculation. I thought Mike Jackson did a very articulate job of describing why financing is important to the industry and to individual companies. But beyond that, I'm not going to comment on any speculation. Okay,
let's talk about what Mike mentioned, though, just for people who maybe weren't listening a few minutes ago. He said that it's very important to have some sort of financial company there so that a buyer who walks in the door to the showroom can take a look around and make sure that they can get leasing or make sure that they can get financing one way or another. Do you have any idea how much of an impact that makes in terms of sales on the showroom floor?
Well, financing of some sort could be upwards of 40% of the market, depending on point in time. So it is a big piece of the market. There are a number of providers out there. We have a modest captive called GM Financial. So we look for a number of ways to supply the market with credit.
Okay. Mr. Gursky, we know that the Chevy Volt was named Car of the Year yesterday. We offer congratulations on that. What does this mean for GM?
Thank you. Well, the Volt is fantastic technology. My wife's been driving one for the last 2 months. She's been getting 90 miles to the gallon. This is fuel economy that's been unheard of in this market. It's cutting-edge technology. GM is in the forefront of this, and we plan on aggressively pursuing this technology and broadening it out.
Steve, good morning. It's Mike. Good seeing you at the show yesterday. And congratulations, as Becky said, on a technical marvel, the Chevy Volt. The one thing I would observe, though, again, I'm always a pragmatist, it's expensive at $40,000, and that's rarefied air for a vehicle that's not a performance luxury vehicle. And without the government tax credits, that price point's not sustainable. What do you see going forward is how you get the price of the Chevy Volt down?
Sure. Mike, we have challenged the organization, and Dan Ackerson, our CEO, has challenged the organization to aggressively take costs out of the Volt. This is new technology. It's just getting started. As this technology develops and volumes improve, we would expect costs of the Volt and Volt-like technology to decline substantially, making the car more affordable to consumers.
Mr. Gursky, what's different about GM this time around? You were responsible for the man who's kind of going back and forth between the company and the unions and being a good point of communication there. What's different this time, and can that last?
Well, we have a very simple message: design, build, and sell the world's best cars. We got a business model that allows us to make money at the low point in the cycle. We have a very conservative balance sheet with virtually no debt, and we have significant exposure to emerging markets. More important than that, or as important than that, we now have a product line that's much broader. No longer is GM just a large truck and SUV company. We make money on crossovers. We have a lot of small cars hitting the market that are very credible and very competitive, and we think it's important to be able to make money in all segments of this market, and we're in the process of doing that.
You know, Steve, to make money at the slow times, at the low point of the cycle, almost sounds like you're going to keep your labor costs and your labor force down. I mean, we just heard about Ford. That was one of the things that really got people excited and optimistic, was hiring 7,000 workers. Will GM, just by nature of now having to perform because of what it's been through, will it be hesitant to hire new people and be one of these companies that we're saying, hire, you've got the money, hire, but you're not doing it because you're afraid of the next downturn?
Well, Joe, we're going to be prudent about what we do. As volume comes back, we will hire more people as we need to put more capacity in place to keep up with the market. But we're very sensitive to going back to the way it was or turning the business model upside down again.
Although all of these things you've mentioned about how GM really is on the road to recovery, has a much broader portfolio and a lot of different options this time around, that probably makes the unions think, okay, when do we get our rewards for having gone along with this plan as well?
I think if you listen, Becky, to our CEO and the message coming out of executives in our company is it's important that everybody participate in the recovery of this company. That as profits improve, the hourly and the salaried employees participate, and everybody understand with full transparency what's going on here. So we would expect all employees and all stakeholders to improve as profits recover.
Steve, we want to thank you again very much for joining us. And again, congratulations on the Chevy Volt.
Thank you. Thank you.
Good seeing you, Steve.
All right. Again, Steve Gursky. If you have any comments or questions about anything we've been talking about here this morning, go ahead and email us. Our address is squawk@cnbc.com. Mike Jackson's going to be here for the next 2 hours, so if you've got questions for him, please send them along as well. Thanks, Joe.
I want to follow up a little with Mike, but we don't have time, so between now and then, I want to remember to ask you about where you'd like to see oil, because you'd like it to go up to migrate people to smaller cars so that we can get off our addiction.
No, let me state it.
Then again, if it goes up, I mean, you're at $28, AutoNation. You've never been at $28 before. He walked in here. Tax? It was like Mr. Penny Moneyback. I looked around. I saw like things falling out of your pockets.
I would like the
hundreds.
I would like the price of petroleum per barrel to go down. And then we should have a tax policy in the U.S.
You're still on that. You're still on that.
Still on it. Not right now, but in the future. Tax gasoline at the pump and keep the money in America rather than sending it to the Middle East forever.
In America means with the government. I mean, that's a close call.
I would rebate the money at the end of the year.
That's a close call.
I would rebate. That's
a close call.
You're getting towards a libertarian. I would rebate the revenue from the gasoline tax at the end of the year back to people. Give a tax credit.
That makes sense.
It's not a revenue generator. It's to change consumer behavior.
And you can even make it make it progressive and rebate it to the right people.
And rebate it to the right people. Exactly.
But it's not progressive.
Can be done.
You don't get it to the end of the year, because if you're living
so you have an arbitrage. You get an arbitrage. You change your behavior during the year to spend less on gasoline and consumption of energy, and you get a healthy rebate at the end of the year. You actually come out ahead.
It's like Bloomberg, who doesn't want anybody to drive in the city.
What is your I know, you don't like talking about such untoward things as like your stock and things like that.
No, 28 is
28
is nice. It's really
at 16
nice.
million at 16 million units. What is AutoNation?
Oh, that's an exciting.
What is your company worth?
That is an exciting.
What is that company worth?
That is an exciting prospect. Several $billion.
No, it's worth $4 billion. Not what are you worth? It's at $4 billion right now. 4.1.
$4 billion.
What do you think the company's worth?
Joe, I can't give you that number. You know that. It's a
what does Eddie Lampert think it's worth? Or what are your investments?
And I'm not going to give you that number either. But you don't have to be a rocket scientist to do the math. Here we are at the trough of the industry. With last year's sales at 11.5 million, and the industry is more profitable at the manufacturer, supplier, retail level. It's a rational, sustainable business model, and we're on a gradual recovery back to 16 million units. So it's going to be a very enjoyable 3 or 4 years, which I really look forward to, which I worked hard to earn this position.
I know you did, but where was the stock? Did it get to 2 or was it at 4?
It was at 4, Joe.
It got to 4. Now we're at 28. I mean,
it's great.
It's great, but buy low, sell high. I would buy at 4. I would perhaps sell at 28.
No, absolutely.
What?
You're going to sell?
Well, I don't look at. I mean,
you're at the bottom of the recovery. You don't sell.
I think
now.
The bottom of the recovery was in your stock at 4.
Okay, that's the absolute bottom. I'm talking about the automotive cycle.
No, I know.
The automotive cycle, 11.5 million for last year is a depression sales level. It is, the scrappage rate is 14 million units. We put in the junkyard 14.5 million units a year in the U.S. I mean, we are so far below trend on auto sales. The only question is not if it's going back to 16 million. It's just a question of how long it takes to get back to 16 million. And all the irrational behavior has been squeezed out of the industry. It's about profitability, sustainability. So I've said this. I said this a year ago. Yeah. I've never been more optimistic about the American automobile industry. And if you think about it globally, this is an unbelievable irony. The American automobile industry is the healthiest in the world. Europe did nothing during the crisis to take out capacity. It's an unsustainable mess. You want to talk about government motors, go to China. You want to be a car manufacturer in China, you're going to be in business with the Chinese government. They always seem to win that game in the end. So lo and behold, here you are. If the American automobile industry is the place to be. Who would have thought that 2 years ago? It's really a transformation. It's an unbelievable story. And I'm excited to be right in the middle of it. I'm happy my stock's 28, and I'm optimistic about the future. And I can't give you a number.
Did you pick up all the stuff you were dropping on the way? You can't help it, right? It's just, all right, we got to go. Up next, breaking news, the latest read on the state of small business.
But I want you to listen to our guest host here, Mike Jackson, who has another sort of small business indicator. Mike, you're selling trucks like they're going out of style right now, which is a positive small business indicator.
Yeah, our pickup truck sales, Bill, are up 35%, and this is all to small business. And there's no question that for 2 years, Steve, they didn't replace these trucks. They're old, they're tired, they're the backbone of the workforce of America. Pickup trucks built America. They're not vanity statements whatsoever. And we're seeing small business come out and buy these and saying we're at least more optimistic about the future, that we feel we can buy a new pickup truck to go out and do work.
You're not picking up that
is a leading indicator to me that will say your survey may not be positive at this moment, but I think it will be. At some point, these sales are going to result in a more positive survey from you, Bill. That's my sense of it.
From your lips. We hope that happens.
Bill, is there anything that can be done here, Bill? I feel like, when Churchill said America gets around to doing the right thing after exhausting all their possibilities, I feel like we're still exhausting possibilities here.
All right, we're speaking to AutoNation CEO Mike Jackson. One thing I was thinking about earlier, because you love all your children equally, I think maybe now you love your U.S. children maybe a little bit more, although I'm not even sure that. You'll defend Toyota. You'll defend...
I wouldn't even use the word defend with Toyota,
Because they're part American anyway. I mean, they're made here.
Yeah, they're made here. And if I look at Toyota last year, they're still the #1 retail brand in America, despite all the turmoil, despite shutting the factories.
Where I was leading.
But I would say this, Joe. As an American, I felt very strongly that it's important that America still make things, and one of the most complex products in the world is an automobile, and the engineering talent and and the engineering capital that goes into it and the high-skilled jobs around this industry, it would have been a travesty for America to lose it and have it swept away. So for me to see this industry not only survive, but to be transformed and to thrive like never before in a global competitive
Well, that was going to be my devil's advocate question. Seeing the Hyundai CEO, we had him on yesterday, seeing some of their products, seeing how the automakers got in the position where they were left in the first place after the assault from Japan. Why do you think it's not going to happen again? And are our products going to be able to keep pace with the engineering coming out of Hyundai and Japan?
So this is a genuine transformation. And as a Republican, it pains me to say that it took a government intervention and a government task force to finally put the stake in Dracula's heart of the production push bankrupt business model that the American manufacturers have.
But did they do it permanently?
Yeah, they
is this
did
a change
it.
That
they
is here to stay
did
or
it
not?
Permanently because the cost, the high fixed cost and the high legacy cost were finally dealt with comprehensively.
You've got to negotiate with the unions again, though, coming up. And the unions look at this and say, hey,
the proof of that is the profitability of these ones. Now, they have in this agreement, I mean, the government was tough on the unions also. The unions had to take equity for future benefits, which they never took before, and they had to guarantee that they promised they would not strike for 5 years. So there's labor peace for 5 years with clean balance sheets. And I think the pain of this restructuring was so high, and the price so high, that everyone has sworn never again. Never again. And anytime we see any behavior that is indicative of going back to the old ways,
on either side,
there's going to be people who speak out strongly about it and against it, including me. I'll scream from the rooftop saying, "Here we go again." So I think it really is a genuine transformation. Everybody knows the end of the story of production push. It's oblivion, it's bankruptcy. Because at the end of the day, production push, you undermine the resale value of your products. You pull the rug out from underneath existing customers that drive them away.
All right.
And it's a downward spiral.
Do we have the engineer? Do we have the engineers growing up here? Are we letting the engineers in and staying here with long enough?
This is a very important
with these other.
This is a very important point, as I look at it. So the apple was rotten at the top, because if you look at Alan Mulally, and he turned around Ford. So one man came in, Alan Mulally. He didn't change the engineers. He didn't change the designers. What he told them to do was very different. Bob Lutz came into General Motors. Tom Stevens and Ed Welburn were there. They're there today. It's the same people that are creating these fantastic products. And Chrysler now has just been turned around by Sergio Marchionne. One man comes in and says, what we're doing is completely crazy. He lines everybody up and says, this is the way we're going to do it. And basically, the same engineers and the same designers with input from Fiat have fixed the quality issues at Chrysler and revitalized it. And yes, I firmly believe it's sustainable. Okay. And if you look at the foreign manufacturers, they're investing engineering and design talent in the U.S. today. Okay, we will continue this conversation with Mike Jackson. In the meantime, it's a new year, and that's leading to a lot of questions. Tom, good morning. This is Mike Jackson, a proud member of the Chamber.
Yes, Michael, we're...
Certainly over the last 2 years, you uniquely articulated the American dream, namely that America's strength is its economic might, and this economic might was created by this combination of aspiration, innovation, entrepreneurship, and risk-taking. And this contrast between your vision of America and what was coming out of the White House over the last 2 years could not have been starker. So I think that's where it gets black and white. And now we have this moment where the president's going to come to the Chamber of Commerce and speak. I mean, 6 months ago, it was almost incomprehensible. So how amazed are you that this moment has arrived? And did you think it would happen?
Of course I thought it would happen. I mean, we work every day with...
Would it happen without the midterm election results?
Well, I'm not sure about that, but we work every day with the cabinet secretaries, with the White House staff, with people that have jobs that they have to get done. We work every day with the leaders of the House and the Senate. So I knew, and the president was here. He was here when we had the president of Russia here. And look, we had differences, but these were differences about how to do it, not between us personally. And I'm glad he's going to come over and visit, and I hope you'll come and join us that day.
Invite me, I'll be there.
Good. Our hope is that we can get away from the sort of intramural skirmishes that the press so much likes to cover and get down to the fundamental questions. What are we going to do about trade? Are we actually going to go out and double our exports? Are we going to take care of the Korean Free Trade Agreement, which will make 70,000 jobs for us? But if we don't do it by mid-year, we'll lose 345 or 350,000 jobs. These are the questions. Are we going to rebuild America's infrastructure? Are we going to deal with the regulatory tsunami that is coming all over the American business system? Are we going to start to look at the deficit? These are the fundamental questions that we should be arguing about, not about who said what to whom.
Tom, we would love to have you back here to talk much more about this. If you're in New York, we'd love to have you on set with us, too.